Today is Tuesday, the last day of April, April 30th, and you can see Apple has just reported earnings, and it has shot up $12 from the close, and it keeps on running, but the results are just out for the last 45 seconds, so we'll see what happens. Let's take a look at the overall market. It really didn't do very much today. It was a change of 0.1%. Of 2.8 S&P units, but there was a range of 24 units. So the range on the S&P today was quite large, but we finished up, frankly, insignificantly, 0.1%. So if we go back to our hourly chart, we've achieved a new, we've got a bit of an upward channel here. So let's draw that. Let's go into Motive Wave and let's take this channel tool and drag it here. Let's close that down and let's just see if we can't identify a channel. And we can here with the bottom of those candles and the tops of these candles. So we've got a bit of a channel happening here. Top of the channel, bottom of the channel, midway, bottom of the channel, top of the channel, bottom of the channel, now midway. So let's see if we can't hit the top of the channel and see if this modest strength will continue. The volatility index is still at 13, but let's go look at some other numbers. Let's look at advancers to decliners. They were dead even today. Advancers to decliners were even. The NASDAQ didn't have a good day. It was down, whereas the Dow was up modestly, and we said the S&P was up modestly. It was the technology sector, primarily Google, that was, and Facebook, Google, that was dragging things down. Apple dragged things down because people were not expecting the results that Apple came up with. Let's look at the oscillator. The oscillator yesterday finished at 0. It required a 247 A to D difference for it not to move. It probably isn't going to move, or could be, a hair breadth above 0. So the oscillator isn't telling us anything right now. Let's look at Apple. It's now at 210.87. Actually, this 5-minute chart is going to tell us more than the daily chart. This is regular trading hours. So let's go into extended data. And we're looking at a 5-minute chart, so we can see the pullback from the high of 213. The pullback has started, and it's going to require some feedback, I think, from the 5 o'clock phone call. But I sold my stock. Remember last week I sold my last 300 shares, but I kept my 11 contracts of short the 200 puts. So it looks like these are going to pop tomorrow or drop and probably be worthless. So I can roll into next week and collect more premium on some Apple puts, but I'm not quite ready to replace my stock. I may sell more puts in that account as opposed to buying stock, because that's been going pretty well. Amazon was down 6 points today. So if we look at it on a one-day basis, still way above the cloud. On a weekly basis, above the cloud as well. But we've got this valley up ahead and this flat bottom here. This doesn't look good for Amazon. You don't usually see candles continue to rise when you've got the presence of an inverse cloud and a flat one at that. So I would think we've got some retracement to do, and it might be when we hit 2027, which would be the closing high, the previous closing high, and then we might do some pulling back, and that'll just be purely profit taking. Caterpillar 139.21, so we are still on target for our 149.52 for our Gartley pattern. We've got a bit of a trend line happening here, and it starts with this point, this touch in March, this touch in April. So let's keep an eye on that. But I am still long Caterpillar. Gold didn't do anything. Intel stayed about the same. Still has not closed the gap, but I expect that it will close the gap before it moves up. Google was your big disappointment today, down $100. That's a huge, huge gap for it to fill. I mean, when was the last time that you saw this kind of a gap in Google? I mean, I've not traded Google, so I don't know, but it's not good. I'm trying to look for a flat cloud similar to what the S&P had. Remember this S&P, or sorry, what was it? Which stock? Oh, it was Amazon. Amazon showed this beautiful big yellow cloud, and we came down to test it, got support on the bottom of the cloud, played the top of the cloud, broke out, but you've got this red here. So I'm going to take a look after hours and try to find you a similar chart that looks like this and see what happened to candle movement. See, we got the yellow starting here. Sometimes what we see is we jump this chasm, but we do come back and we test either this yellow cloud moving up, or we do actually touch down on the flat cloud here. WDC, I bought back into WDC today because the earnings were received well. People were happy with the results. You have this gap here that still needs to be filled. So let's go into Motive Wave and let's take our support zone tool and let's just draw that gap. Pretty bright color, but there's the close, the close on one day, the close on the next day. We could put it down to the open, but then that's no point because it's already started to fill it. So we use the top of the following day. That's the gap that has to be filled. But I did buy back into WDC, but I sold the 140 calls. I bought it about 139. Sorry, where are we now? We're at 51. So I bought at 49 something. I sold the 50 calls. I think tomorrow WDC could be a little bit of a pullback. Hoping it is, because I want to keep the premium on those calls and roll them into next week. Whirlpool, we're still keeping a look at. And we're still seeing on the weekly basis, the 200 is still proving to be resistance for the Chiku span. So we need to get over this level here, which is 139.94, which we hit sometime this week. Let's see on the daily basis. Today we hit 139.74. So we did actually have the Chiku span hit the 200, but it pulled back and ended below the 200. So that's going to be our break area, and we might want to take a look at a little bit of a position, but we're going to see resistance at the top of the cloud. Eventually it's going to break out. I'm confident that WHR is a stock that I want to own in the next few weeks.